Good afternoon, everyone. Or should I say, moyen? Anik, did I get that right? Very good. And welcome to Luxembourg for the 25th Annual Conference of the IAIS as we look to reimagine insurance in this rapidly changing world. And let me kick off by saying how very pleased, how excited we all are. On behalf of the IAIS, I should introduce myself, Jonathan Dixon, Secretary General of the IAIS. Thank you. And we're all incredibly excited, incredibly pleased to be here in Luxembourg for this 25th annual conference. I can think of as a global association that is about bringing people together, probably few better places than Luxembourg that is really a coming together place for Europe to have a gathering like this, and of course in such fantastic facilities as well. So a very big thank you to our hosts, Claude, and your entire team for the fantastic job in organizing this. I also want to recognize Victor Rod, who was our longest serving executive committee member of the IAIS and until a few years ago. And I understand this was an idea hatched some 6 years ago, and I'm glad it's come to fruition. So fantastic to be here. So my job is really just to kick off with with an overview of the next day and a half. I'd like to start by extending a very warm welcome to all of you, both members and stakeholders. This is really a highlight for us, I think, of the year, because I was actually looking, it's interesting, we have an almost equal number of members and stakeholders at this event. So it really is a coming together of a partnership. And thank you for choosing to be part of this important event, and that so many of you have been able to join us. The participation of so many of you from the global insurance sector is, I think, indeed a powerful testament to the leadership role that this diverse and inclusive association of the IAIS is playing through its standard-setting work, its financial stability work, and its implementation work. So turning to the next day and a half, you may have noticed from the program that we are building upon somewhat the Moscow Global Seminar format, in that we really have, if you like, a first half this afternoon that talks about delivering on our current commitments in terms of the post-financial crisis reform agenda and building a more robust, a more stable global financial system. So we will, of course, talk about our commitments around delivery of a common framework for the supervision of internationally active insurance groups, including a global risk-based capital standard, ICS version 2.0, and our important work on systemic risk. And then the second part tomorrow, which of course turns a bit more to our future strategic agenda and about the emerging risks that will form very much part of our next 5-year strategic plan. And in particular, we will focus on several emerging risks. And we will kick off giving particular attention to technology. We will have a keynote speaker who's an expert on big data and artificial intelligence, who will give us an address that will set the stage for a panel discussion that will explore this brave new world of big data and artificial intelligence and what it means for the insurance sector and, of course, what it means for us as insurance supervisors. We'll then move on to session 3, which will examine the role of supervisors in supporting sustainable economic development. Again, I think this is really a sign of the pivot. Many years of focusing on financial stability, but increasingly looking to balance that with an increased focus on growth and development as well. We know that the insurance sector supports sustainable economic development in a number of ways. For example, by expanding the availability of long-term finance, in particular for infrastructure investment, supporting more effective risk management and increasing resilience. But we also know that perspectives vary on the role of insurance supervisors in this area, and I look forward to an interesting debate on that. And then in session 4, we move to, if you like, a bit more of a deeper dive on a particular aspect of this issue, which is around closing the protection gap in an environment of extreme weather events due to climate risk. And panelists will discuss the role of insurance supervisors in closing this gap, and will discuss specific steps being taken by supervisors in different regions of the world, both developed and emerging, to share those experiences. And then finally, with many of these emerging risks impacting the treatment of customers, session 5 will explore the linkages between prudential and conduct of business supervision, focusing on the promotion, if you like, of a holistic approach to insurance supervision, being careful not to overuse the term holistic at this stage. And then just to flag one final part of today, of tomorrow, sorry, actually today, which is an annual event that we have, which we'll be taking advantage of some time today at the conference, which is recognizing that the work that we do would not be possible without the dedication of our members, who freely give of their time and talent. And so later today, we will also pay tribute to our distinguished fellows for 2018, which this year will be 3 former colleagues who've made substantial contributions to the work of the IAIS during their tenure. So I hope that gives you a sense of today and tomorrow. And with that, my first job is to recognize a chair who has achieved a huge amount over the last year. I hope she will share a bit of that with you. And I am also very happy to announce that she is also our newly re-elected chair. So with that, I would like to now recognize Victoria Saporta, our newly re-elected Executive Committee Chair, for some welcoming remarks.
Thank you, Jonathan. I'm not sure I will be able to replicate Jonathan's superb accent in Luxembourgish, but here is my version. Victor actually gave me some lessons. Moyenne. So, good afternoon and welcome to the 25th Annual Conference of the International Association of Insurance Supervisors. I'd like to extend the thanks that Jonathan has given to the Commissariat aux Assurances. These are very sort of difficult events to organize well. I know that because we happened to host the global seminar last year, and sort of from personal experience, but this has been a fantastically superbly organized event. So thank you very much. It's a pleasure being at the crossroads of Germany, France, and Belgium in this duchy that, of course, has existed for centuries in different forms. So fantastic to be here. Thank you very, very much. But we are here to try to reimagine insurance, and it's a particularly fitting theme, the word reimagine insurance. Of course, there are lots of the industries taking different shapes and forms, driven by the demands of the consumers, but also that are changing around the world, but importantly because of technology. And at the same time that its industry is doing its things, and it's facing lots of opportunities to serve more customers that weren't served so well, to price more appropriately. It's also facing risks, not least from cyber. And we, the IAIS, the supervisors, are there to do a job to protect policyholders and contribute to financial stability as the sector itself takes its own journey. So we have to reimagine insurance supervision as we are imagining insurance. And what does reimagining mean? It thinks to think anew, think in a new manner, take a fresh look. And it is a fitting time because we just had, over the last few days, conversations about, presented and discussed at the Executive Committee and afterwards at the AGM, a new draft strategic plan and financial outlook, which looks forward to what we do once next year we finalize COMFRAME and the holistic approach to systemic risk. At that stage, we will put to bed the post-crisis reforms, and we will pivot to a new world where we are primarily about implementation and supervisory support and spotting new risks. I am aware that we started a little bit late the conference, so I'm aware that the Minister, who has kindly accepted to follow my remarks, needs to leave. So I'll keep it short and just basically say that there will be lots of opportunities later on today to learn about the progress we have made on the program, and as Jonathan explained, tomorrow to focus forward on the new challenges. So thank you very, very much, ladies and gentlemen. And with that, I would like to recognize the Finance Minister of Luxembourg, Mr. Pierre Gramegna.
Thanks, Victoria, for being really brief. I'm always worried when people are telling you, I'm going to be brief, because that's when they're going to be long. And you kindly said to me, I'm really going to be brief. So, Victoria, congratulations upon your appointment, reappointment. And dear Jonathan, thanks for the introduction, for all the work together with the team of Claude Virion, who is the head of our Commissariat aux Assurances. The venue is a particular one. If you look around the room, you can see this is not a hotel. This is a quite special place. This is the place where EU ministers meet in April, June, and October. The other months they meet in Brussels, but during those 3 months they meet here. So we have 19 translation booths. You don't need that many because you all speak English. Congratulations. Well, you need that on an everyday basis in your job, so that makes it easier, but that's why we have these fantastic facilities here. And I'm glad we can use them off and on for other occasions like the 25th conference of the International Association of Insurance Supervisors. Welcome to Luxembourg. We have a long history here, and Victoria briefly alluded to it. But before I go back into history, I would like to say that your presence here means a lot to us in Luxembourg as a country, as a financial center, and also on behalf of the supervisor, Claude Vieillot, and his team, that you've come here. Now, it was said by the Secretary General that it was already your predecessor, Vicky, who had started to launch this process. And as your prudent people, the insurers, it seems you have long-term planning. 963 is the year where the city of Luxembourg was founded, a little bit more than 1,000 years ago, but insurance goes back much more. My team has done a wonderful job trying to find where the first examples of insurance are. And I tend to believe them because I couldn't double check. As all ministers, I have little time. It seems that the first insurance contracts were done in Babylon 4,000 years before Christ. And there were contracts called bottomry contracts, I was told. Now, in Luxembourg, we do not have a maritime shore. So my friends in my team have found that this was to give a kind of insurance if we transport cargo, and you have to then, you wouldn't take an insurance, you would take a loan, but the interest rate was quite high, because in the interest rate was the risk of losing the ship. And these bottomry contracts are considered in world history the predecessors of insurance. What is very interesting in this is that the ship was in fact the real guarantee of the whole contract. And if you were lucky, the ship was going back and forth many times before it sank. And so you had a guarantee, and that's what you insurers try to have, a kind of guarantee. Today, your guarantee is not the ships, your guarantee is the statistics. Over time, the insurance developed. It is famous. Victoria told me she's British with many other origins on top, but the 1666 fire of London is considered like the starting point of modern insurance. And I just want to show that, in fact, insurance has been with us for a long time, but regulation of insurance is much more recent. And in today's world, in the brave new world of big data, as you call it, of digital economy, of world economic and financial crisis, there's so many things you have to pay attention to, and I'm not envying you. But you shouldn't envy me, because your risks are my risks. What I mean is climate change, digitalization are issues that are important for you, but they are important for all governments. They're particularly important for finance ministers. Now let me just say 3 major ideas here. First, what is the role of a regulator? Now, as I said, regulation is quite recent over the last decades and centuries, but we have seen a regulatory tsunami in the last 10 years. Now, I like to use the word tsunami because I've lived in Japan for a couple of years, and it sounds really good. Now, is it the appropriate word? I prefer the comparison with the pendulum. We have lived before 2008 in a time where there was a relaxation of regulations, and it led into a terrible financial crisis, not to talk about the economic crisis that came afterwards. And as it often happens with the pendulum, when it has gone too far in one direction, it tends to go back eventually too far in the other direction. The only problem is you never know where is the right position. And so I understand those in the room, and there are certainly some of you who think that governments, international institutions do too much today, that they are overcautious. Some might say, you ain't seen nothing yet of risks that loom, and we are not where we should be. We are continuously in that debate in Europe when we do the banking union, which we did in 2013. And I remember it was the first ECOFIN Council I attended back in December 2013. I had just been appointed and sworn in as a finance minister. And when I attended that meeting, I was really, really happy. I said, how nice Europe is. I had attended meetings as a diplomat before, but I said, how great that we have this banking union. And the next day, I thought in the newspapers I was going to read, Europe is doing the banking union. No, that was not the title. The title was, they have agreed on rules, but they're never going to be able to implement them. That was the title. And that focuses the attention on, it's not enough to have rules, you have to implement them. Now, the good news is with the banking union I mentioned as an example is we have implemented it. We have systemic banks that are being supervised by the European Central Bank. We have a single resolution fund, and so on and so on. We have been able, it took time, but it happened. So we need to tell the success stories. This is all not written here, but this comes to my mind when I speak to you. We need to tell the success stories. Not only talk about what didn't work. We need to concentrate on what didn't work. You need to do better supervision, have better rules, yes. But when we've been good at fixing things, we should also talk about it. Because you, as an institution, international institution, you are not a newspaper. A newspaper is interested in what doesn't work. Good news is no news. But we're not in a newspaper, we're not in media here. We're amongst professionals, and we should also contemplate what does work. And you have to spread the word of what does work, because nobody else is going to do it in your place. Now, what are supervisors doing? Obviously, they supervise, they control, they check, they do on-site inspections, they make sure that the rules are being attended to, complied with, and that's fine. I think that's only one important part of your role, but it's not the only one. That's why I don't like the word watchdog, which gives this impression that you are passive. There are rules and regulations that you try to impose upon someone. No, there needs to be a dialogue. That's key. Dialogue with those who implement those roles on an everyday basis. I think that the Luxembourg Commissariat aux Assurances does a very good job at that. Dialogue doesn't mean that you're nice, that you do not apply rules correctly or efficiently. It just means that you listen to those who have the best experience. And if you listen well to business, you're going to be very good at anticipating the needs of the business and how to regulate them. And one way of doing that well is by speaking the language of business, which our regulator does. I hope, and I suppose there are other regulators in the room of other countries where this is the case. Now, as I mentioned in the beginning, nicely you all speak English, but not all regulators use that language. We do here. You can file your records, file your application, everything in English. That's what I call customer service. And you can have good customer service and still be very strict on rules. And to find that right balance is the right thing to do. Now, a regulator evolves in an ecosystem. And every ecosystem has its specificities. The one of Luxembourg is, by definition, cross-border. Every time you try to think of selling a good or a service in Luxembourg, you immediately think that you have to do it cross-border. Now, this is not the case in large countries. where the international aspect is often secondary. In our country, it is the primary goal. It's not a handicap, but it's a challenge that if you overcome it well, becomes an asset. Now, in Luxembourg, we've chosen to have a specific regulator for insurance. Not that many countries have that. It has proved to be quite an advantage because our Commissariat aux Assurances knows all of you well and is very well positioned to understand your problems. So in other terms, the Commissariat aux Assurances in Luxembourg is a very good example of how you can do dialogue. Now, the other very important thing that I would agree with you is not happening that often. Is what you need as business is predictability. And when I was addressing the issue about do we have too much or too little regulation, I think it is even more important to have a timeline and to have predictability. I think your companies can live with more regulation if it is predictable, if you know when it's coming, if you know what the burden is, what the rationale is. It can be a lot, but if it is predictable, it is manageable. The other thing that you need as a supervisor is make sure that your country is reputable and applies all the rules. So it's not enough to listen to business, to understand business. It is also important that the jurisdiction in which you are is such that when you have a certificate, a license, an authorization, you want to be proud of it and go and say, I have a license in Luxembourg. I have a license in the United States, in the United Kingdom. And I'm proud of that license because it was difficult to get it. And now I have it. So those, not only in the insurance sector, same goes for banks, who come to me and say, it was so tough to get the license. I say, I'm glad to hear that. That's good news. It's good news for our regulators, they do their job, but it's good news for you. You have something that is valuable. It's another way of explaining how the dialogue functions. So my country underwent a lot of changes in the last couple of years in terms of approach to openness, to transparency, to how to behave in terms of compliance. Not trying to say we do the minimum. We decided in 2014 to give up the bank secrecy and to go for transparency. It was not an easy move. It was also contested by quite a few. But today, in retrospect, most say it was the right move. And so it's not enough to be efficient, have dialogue. You need to have a good reputation and to be credible. And had we not done that, we would not have been successful in the context of Brexit. Now, the ecosystem here in Luxembourg is based on 4 pillars. Private banking, investment funds, insurance, and fintech. Let me come back to fintech at the end of my presentation. But in the context of Brexit, what we did not do is roll out a red carpet and say, come invest in Luxembourg, you're most welcome here. This is the most efficient place, the most favorable and attractive place. No, that's not what we did. We said we have a good legal framework that is attractive, but we won't change a millimeter because there's Brexit. We're just going to continue to apply the rules, and we think we are attractive as we are. And I can tell you we've been particularly successful in attracting, sorry for that, in attracting insurance companies in the context of Brexit. Close to 12 companies chose our country. And again, our message in that context is not come to Luxembourg and close in London. It would not make any sense. The message was, you need a place inside the EU single market. You need a subsidiary there. Find a smart place to do it and build bridges between your subsidiary and your headquarters in London. And that's what has made us successful. So I think Brexit was a real-life test to see if we are attractive, if our framework is conducive to business, and at the same time, if it is credible. Let me finish by two elements which I think are the ones that you're going to spend a lot of time on in this conference, which are game changers. One is the digital economy, and the other one is climate change or green finance. Let me start with digital economy. Because you're talking about digital in your panels here. Digital is not only impacting insurance, it's also impacting finance, but it is just basically impacting the whole way in which we live. So the business models are changing. Now, the very simple way of looking at it, also for you as supervisors, is to say, we're going to apply the same rules to the traditional economy as we do to the digital economy. And I think this is a good starting point. We should definitely not exempt the digital economy from the rules that we have set up for the traditional economy. But we need to open our eyes if there are specific needs, because the business model is changing. We're very much only in the beginning of this evolution. And I encourage you in your exchanges of views here to look into it, what you can learn from each other, what are the loopholes in terms of supervision, what are the loopholes in terms of taxation. I've been in Brussels Monday and Tuesday. We discussed digital taxation in Brussels. You know that Europe wants to go ahead with digital taxation. Luxembourg has taken a constructive view in this field, which is double in the sense that we think that the solutions that we need to find in digital taxation, like in the digital economy, needs to be comprehensive, needs to be at least at OECD level. We need a level playing field in these things, especially in digital economy. How else do you want to regulate digital economy which doesn't have a physical presence other than in an international way? So level playing field is key. But if level playing field is not happening, because there's too many actors, too many countries, while Europe could go along and start first by putting rules down, but make sure that this is only on a provisional basis. Because at the very end, and when I mean at the very end, I mean in 1, 2, 3 years at the latest, we need OECD G20 rules in this field. And let's not forget, if digitalization is changing the business, the business models, it will also change supervision. Last but not least, climate change. The Paris Accord of 2015 is a game changer. I know there's a not so small country in the world that doesn't agree with that. But you know, facts are stubborn, and the climate and the weather is very stubborn too. And you do not need to be an expert of weather forecast to see that the climate is changing in Europe and all over the world. So Europe has committed to take this extremely seriously. And here is about anticipating. Europe has bet on the fact that if we invest more and more quickly into technology that saves the climate tomorrow or even today, it's going to be an economic advantage. We need to commit public money to that. In fact, the Paris Convention says 100 billion every year starting from 2020, $100 billion. But this is a drop of water compared to what you need for really changing the world, changing the technologies everywhere, and you need to have on board private economy. And what we need is in terms of trillion of euro. So Public money can't do it alone. It needs to be public and private together. And when you hear these big numbers, the only companies in the world that can deal with big numbers, it's insurance companies. Yeah, the banks too. But even bigger, it's the insurance companies. Because when the number becomes really, really big, everybody wants insurance. And what's going to happen here is that if we want to mobilize private money for climate change, one major way of doing that is by making sure that pension funds, insurance companies, are not only allowed to invest in new ventures, in new companies, in new products, in new investment funds, it's that they are encouraged to do it. But Solvency II laws are too punitive to investments by insurance companies in the private economy. And here we are back at the image of the pendulum. So we really must make sure and advocate for the insurance companies that investing in the real economy, investing in climate change is not penalizing. I'm sure this is something that's going to come up in your discussions. You can count on me to support you in that enterprise, which will need that we mobilize European forces, American forces at the world level to make sure that investing in climate change is boosted. This is the end of my presentation, but this is not the end of our meeting, because I have promised to come to the dinner tonight, and I look forward to see you all there. Thank you very much.